elected, Kamala Harris has many tax proposals that'll vastly change the way we're taxed. And in this video, I'm going to walk through all of her proposals. And regardless of your viewpoint, please leave a comment on my video to let me know how you feel about them. So first, we'll start with her proposals that relate to business. Her first plan is to increase the corporate tax rates from 21% to 28%. And I should mention that this tax only applies to entities that are taxed as C Corps. So if you have an entity that's taxed as an S Corp, a partnership, or a disregarded entity, this tax will not apply to your business. So I'll just use an example to demonstrate how this increase will affect businesses. Let's say that you have a C Corp, and to make math easy, let's say that you generated $1 million in taxable income in 1 year. Well, under the current rate, you'd be paying 21%. Or in other words, you'd be paying $210,000 in corporate taxes. And after that, you'd have $790,000 left over. Now, under Kamala Harris's proposal, that corporation would be paying 28% instead of 21%. So with $1 million in revenue, that corporation would be paying $280,000 in corporate taxes. And with that, you'd have $720,000 left over. Another thing she wants to do is to change the business startup expense deduction. And what she wants to do is increase it from $5,000 to $50,000. So if you have a small business that's getting off the ground, you're able to deduct 10 times more in your first year. Now, the next set of proposals relate to assets that people own. And the first thing she wants to do is to change the long-term capital gains tax rate. Here, she wants to raise this tax from 20% to 28% at the highest income level. But I also should mention that this long-term capital gains tax rate only applies to assets that have been owned for more than a year. So as an easy example, let's say that you were to buy a stock for $1 million and you held on to that stock for 2 years. And at the end of that 2 years, that stock appreciated in value to $2 million. And after it reached $2 million, you decided to sell it. Now, under the current 20% long-term capital gains rate, you'd be paying 20% in tax on that increase in the stock's value. So it increased $1 million, and in turn, you'd be paying $200,000 in capital gains tax. But under Kamala Harris's proposal, she wants to raise that to 28%. So instead of paying $200,000, you'd be paying $280,000. And Kamala Harris's next tax proposal relates to unrealized capital gains. Now, this can get a little complex, so I'll do my best to simplify what an unrealized capital gain is. So in tax law, the capital gains tax kicks in when the assets are quote unquote realized, meaning that the assets are sold. And a realized gain is an asset that's sold for a higher amount than what you paid for it. However, an unrealized gain is an asset that's not been sold, but the asset's value has increased since you began owning it. And under Kamala Harris's proposal, she wants to have an annual 25% minimum tax on unrealized capital gains for individuals whose net worth is $100 million or more. So to show you how this works, I'll use an easy example for you. To make matters fun, let's assume that you're a billionaire and you buy stock in a company for $1 billion. After a year, that stock value increases from $1 billion to $2 billion. However, you don't sell that stock, you still own it. But even though you still own it and you haven't sold it, you're gonna need to pay that 25% tax on the unrealized gain of $1 billion. So in turn, you'd be paying $250 million in taxes here, even though you still own that stock. And you still have to pay that tax even if the stock value decreases in the following year. Now, Kamala Harris's next set of tax proposals relate to individuals. And the first thing she wants to do here is to increase the individual income tax from 37% to 39.6%. So as an example here, let's say that you made $1 million in taxable income in 1 year. Well, under the current regime, you'd pay $370,000 in income taxes at the 37% rate. But if it increases to 39.6%, you'd be paying $396,000 in taxes. Another thing she wants to do is to have no taxes on tips. And this applies to hospitality and service workers. So if you're a waiter, a barista, or you work in a similar job, you're not going to have to pay taxes on the tips that you earn. The next proposal that Kamala Harris has relates to the child tax credit. Here, she wants to increase the child tax credit from $2,000 to $3,600 per child. And on top of this, she wants to provide a $6,000 child tax credit for newborns in their first year of life. And the next set of proposals that Kamala Harris has relates to housing and estates. And just like her proposal on unrealized capital gains, this tax proposal would also significantly change the game with how we're taxed. And a lot of this stems from the American Housing and Economic Mobility Act of 2024 that Senator Elizabeth Warren proposed. And the aims of this bill are to alleviate the housing crisis and to increase housing affordability. And one of the goals of this bill is to add 3 million more homes and apartments so people can live in them. The first proposal here is to provide down payment assistance to home buyers. And if you qualify as a first-time home buyer, you can get up to $25,000 in down payment assistance here. But providing this type of down payment assistance to home buyers all across the country is going to cost money. So how do they plan on paying for this? Well, they plan on doing so by changing the rules of how estates are taxed. And what they want to do here is to increase the estate tax on people who have died. So currently, there's a 40% estate tax on estates worth more than $13.6 million. So if you have an estate that's worth more than that, you're taxed on 40% of the estate value that's above that amount. But Kamala Harris's proposals will change this entirely. She wants to enact a 55% estate tax on estates worth up to $13 million. And on estates valued between $13 million and $93 million, she wants to have a 60% estate tax. And on estates valued over $93 million, she wants to enact a 65% estate tax on those estates. And on top of this, she wants to reduce the estate tax exemption from $13.6 million all the way down to $3.5 million. And in turn, this will greatly increase the number of estates that are going to be subject to these federal estate taxes. So to give you an example of how this works, I'm going to use an estate that's worth $5 million, another estate that's worth $15 million, and a third estate that's worth $100 million. And let's start with the estate that's worth $5 million. Under the current regime, that $5 million estate is currently exempt from estate taxes. And this is because that estate falls below the $13.6 million threshold right now. However, under Kamala Harris's proposal, only $3.5 million of that estate would be exempt from estate taxes. And the $1.5 million above that exemption would be subject to an estate tax of 55%. So here, that $5 million estate would be paying $800,000 in estate taxes. Under the current proposal, they're paying nothing. So this is a really steep increase. Now, let's move on to the $15 million estate. Under current tax law, $13.6 million of that estate would be exempt. However, that $1.4 million above that exemption would be subject to an estate tax of 40%. So here, that estate would be paying about $550,000 in estate taxes. But under Kamala Harris's proposal, only $3.5 million of that estate would be exempt from estate tax. And on top of that, the $11.5 million that's above that exemption would be subject to a 60% estate tax. So here, that $15 million estate would be paying $6.9 million in estate tax. And under Kamala Harris's proposal, this estate would be paying $6 million more than it is under the current rules. And lastly, let's move on to the $100 million estate. Well, under the current rules, $13.6 million of that estate is exempt from estate tax. And the remaining $86.4 million that's above that exemption would be subject to an estate tax of 40%. So here, that $100 million estate would be paying $34.5 million in estate tax. However, under Kamala Harris's proposal, only $3.5 million of that estate would be exempt from the estate tax. And that remaining $96.5 million above that exemption would be subject to a 65% estate tax. So under Kamala Harris's proposal, that $100 million estate would have $3.5 million exempt from the estate tax, but that remaining $96.5 million is subject to the 65% estate tax rate that she's proposing. So instead of paying $34 million in estate tax, that $100 million estate is paying $62 million in estate tax, or a $28 million increase under Kamala Harris's proposal. And lastly, Kamala Harris wants to change the gift tax exclusion. Here, she wants to reduce the gift tax exclusion from $18,000 now to $10,000 under her proposal. And this gift tax exclusion applies when parents gift assets to their kids. And when they gift assets to their kids, and those gifts are under the exclusion amount, they don't have to pay gift taxes on it. So I'll give you an example of how this works. Let's say that one parent decided to gift $15,000 to one of their kids. Well, under the current proposal, that parent wouldn't have to pay any gift tax on that gift because it falls below the $18,000 threshold. However, under Kamala Harris's proposal, $10,000 of that gift would be excluded from the gift tax. And the remaining $5,000 that's above that gift tax exemption would be subject to a gift tax. So as you can see right now, if Kamala Harris were elected, there would be a massive shift in tax policy in this country. This is especially true with unrealized capital gains rates, as well as her estate tax proposals. But at the end of the day, they may or may not be enacted. And if you guys have any thoughts or opinions on these new proposals, please leave a comment below. And if you want to hear Trump's tax proposals, if this video gets 100 likes, I'll do a video on his proposals. I also have a new book called The 5 Tricks to Teach Your Kids About Money. You can download the book for free by clicking the link in the description below. If you're looking to start a business, you can schedule a free 15-minute consultation with us at Corporate Direct by also clicking the link in the description below. And as always, please make sure to like, subscribe, leave a comment, and turn on that notification bell. And I should warn you, the contents of this video are not legal advice and no attorney-client relationship has been formed.